Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 3:15 in New York on Friday. Happy Aloha Friday, as we say on the islands, 8th day of January 2016, and this is the daily report for gold and silver, our weekend review, and we are combining this with trending markets so we can look at all of the markets as a whole because they're absolutely interconnected and have effects on each other. First to gold. Gold is trading off today, off the lows, but down about $5.70 at 1102.10. That is our current print. It's had a high of 1113 and a low of 1091. The low is something we'll need to talk about because we do have a trade which we did get out of. We'll talk about that in a second. Silver, in terms of the range itself, the range on the high is 1432, and the low 1389, but it is trading back below $14 at 1393, absolutely under some pressure on the day. Traders, first, I do want to go over a trade that we got into over the last couple of days. 2 days ago, I had made a recommendation during the actual video report and show, and then also noted that in proper action that traders that wanted to get long could enter the market at this point. The market was trading roughly at 91.92. That is where the actual trade would have been put on, with stops at roughly 1080. The following day, meaning yesterday, after we had this dramatic rise, I did issue an actual trade alert recommending that those who did not take the call could enter the market and that all should put their stops at 1097. Now, this is 1101 in terms of the actual fib retracement. And then during the night, market is trading at 1102, but during the night, and you can see that with this long low that comes in matching the low, the prior low of yesterday's candle, comes in and trades to 91, so it did get us out at 97. Traders taking the call, of course, on Wednesday got in at 91, 92, out at 97 for a small profit. Those that got in yesterday, unfortunately, got in at around 1107 and out at 1097 for about a $10 drawdown. Now, in terms of what I'm looking at and where I think this market could go, I personally think that what we're witnessing here is simply a counter wave to the rally that has really been underway for the better part of not only this year, but it really began roughly just after Christmas of last year. And then when we take a look at the kind of move we saw, and this is off of these lows at about 1060, because this double bottom here at 1040 really hadn't been achieved since about mid-December towards the third week of December. But really, when we take a look at it, we did see the market move from about 1060 up to about just over 1110, 1113 being the high on today. So in other words, to see the market move up, small retracement, I would expect 1090, 1091, and that's actually what we got. I am under the belief that we will probably see a resumption or higher pricing, all things being equal, come Monday morning or Sunday when it starts to trade overseas. So traders, what are the key areas to look at and to watch in gold? Well, as we've talked about all week, I really think that one of the most critical areas is this $1,100 mark. Now, although we are closing lower on the day, we are closing above 1100, and that to me is still bullish considering the kind of move that we saw. You can see that with this last candle here. We talked about this a little bit yesterday, but we do have some historical precedents in which this particular price point was a support area. Now, former support was at around 1080 as it broke through there, and of course that was resistance as this market was trading near these lows. And so, as we always talk about, a one-man ceiling is another man's floor. So 1080, that's out of the limelight, so to speak, unless we get a effective close below 1100. But right now 1100 is absolutely a level of support. Now, in terms of resistance, you do have some minor resistance roughly at 1118. That's not anything to be concerned with. If the market's going to move up, it shouldn't have any difficulty whatsoever to move through that price point. And in terms of our fib numbers, our real next level to look at is roughly at around 1130 to 1135, 38% retracement in that area. Once we do that, or I should say, if in fact we have this market continue to move higher, then you want to start to take a look at some of these more recent highs that have come into the market, and they come in terms of the area at around 1160. That would be this lower right in here, and then here at around 1170 in that area, and then of course 1191. These would be the areas to watch should we get an extended rally next week. But as I said, right now the levels you really want to focus on in terms of upside targets is going to be around 1118 and then 1135. Depending on how this market opens on Sunday overseas, I still believe there could be some action to the upside, but we have to see if it can hold above $1,100 per ounce. So traders, no doubt, a very interesting scenario that we have witnessed this week and into the conclusion of this week. Of course, an utter meltdown in the Chinese equities markets that's spilling over into the European equities markets as well as the U.S. equities markets. They put in a circuit breaker. The interesting thing in China is that the circuit breaker kind of goes off at 7%. Here in the United States and the mainland, we also have circuit breakers, but they don't really come into play until you have a decline of about 20% in U.S. equities or the indexes themselves. Now, they took those limiters off and allowed open trading as of last night. We did have China really come back and actually closed positive. We had a very, very positive jobs report that came out today, and as such, we had the initial move in the U.S. equities markets being higher. As you can see right now going into the close, we're about a half an hour away from the close at about 10:30, 16,430, putting it off about 83, 84 points on the day. S&P also trading lower on the day, off about 8.5 points at 1923. And so the real question is, have we seen the last of this particular move down, or could we be in store for possibly more downside next week? And that's something I want to explore really on a technical basis. And to do that, I've gone ahead, pulled up our Standard & Poor's. This is vis-a-vis the E-mini futures. You can see the kind of tumultuous moves that we saw all through the week. And here's the thing, if we compare it to the August meltdown, and that's this particular price move here, really the precipitating factors were very, very similar. Weakness in the Chinese economy dragging the Chinese equities markets down, and then beginning a cycle in which we saw global equities begin to trade lower. When we look at the actual sell-off from the highs that they were at to the lows that they went to in a period of 1, 2, 3, 4, really 5 days, after 5 days of trading lower, we're about halfway through that point. Halfway mark would have taken us to about 1970, and the reason we know that is because we in essence have one fib retracement which goes from 1831 up to 2109, so it matches it right well. So we've seen more than a 50% of what we saw in August, and actually 61% comes in at 1937, and excuse me. And the fact of the matter is, I was hoping once I saw that China had firmed up in their equities markets and that we had some sort of rally ensuing overseas, that we would see that following through. Now, if you take a look at this single candle type, again, this is a daily chart, standard candlestick format. You can see how these highs came up to about 1962, but when we compare the open, and it opened just below 37, so at about 36, and the current at 25, we are continuing this downside cycle, and our next real level of support does not come in till about 1900 on the S&P E-mini. So one of the more interesting aspects of the day has been this kind of reversal that we saw after seeing somewhat of a reversal to the dominant trends, meaning the equities markets trading lower, crude trading lower. We had crude up this morning, equities up this morning, both closing lower on the day, to crude down 22 cents per barrel, 33.05. We talked about the fact yesterday that we're really at a 12-year low in oil, and to really see the low that we have hit and to match it, historically speaking, to the last time we've seen this occurrence, we've got to go back to roughly the end of 2008, and that's when you saw the market trading at 32.98. We're at 33.16 right now, but we have effectively gone in and tested those lows itself. Now, to actually go below that and realize, and we mentioned this yesterday, and that is if you look at these particular candles back here in 2008, the end of 2008, beginning of 2009, on a closing basis, the market really closed more like $36 per barrel. On a closing basis, again, this is a weekly chart, and we really got to go back, I believe, to about 2002 before we can see the last time this market has traded on a closing basis at this price point. And I draw your attention, we'll go in and let me make sure this line is straight, but more like 2004. So we're talking about a 12-year time span between when oil had traded this low and current pricing. What will happen next week, we will have to see, but I believe that all things being equal, we should see oil remain under pressure. But the one thing that we do want to take a serious look at is if there is a point for it to, on a technical basis, and that's the thing, we could see the market bounce from here only because we've had this prior historical evidence of support. However, on a fundamental basis, any kind of a bounce, in my opinion, is simply a dead cat bounce, meaning that it's going to be a very quick bounce before returning to lower pricing. So traders, lastly, I do want to take a quick look at the dollar and the euro dollar. Dollar closing up slightly higher on the day, nothing like the activity we saw earlier in the week. And I draw your attention to the chart that I've just pulled up. And of course, this chart is a daily chart in which we have our dollar index on the top, our euro dollar on the bottom, and you can really see the kind of activity we saw even today up. These highs came in up at around 99.19, 99.50 is here. And of course, what we're trying to see is if current resistance, which we're pegging at roughly 100 on the dollar index, if that can be taken out or if that's going to hold. The reciprocal, meaning the euro dollar, you can see that it actually touched at 108, currently trading at 109.18, but the same type of activity in which you had an extended low here, an extended high here, and a key reversal during the day, returning much of the gains that we saw in the dollar and alleviating much of the losses that you saw in the euro dollar as we went into the close. In terms of next week, some of the markets that I am looking at a point in which we can see some sort of support come into the Standard & Poor's. We could see some continued weakness. We certainly didn't get the kind of stability I had hoped to see today, especially with a positive jobs report and the fact that China kind of rebounded after having such a devastating week. So we want to take a look at that. Gold, I still believe gold, although it could soften just a little bit here, I still think as long as it trades above $1,100 that the next real move in the market's going to be to about 1130. We also want to take a look at crude oil. I believe that crude oil is at a technical point in which it could find support, but if it doesn't, it bounces. I believe that will be short-lived at best. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for another gold forecast and trending markets. Bye-bye.